So we've talked about the upside of removing friction with Amazon's flywheel effect. Now let's talk about the downside.
Yeah, we kind of experienced it this weekend a little bit on how lack of friction can work against you. Because if you think, we're talking specifically about the SVB, the Silicon Valley Bank, implosion. The way that a run on the bank could happen years ago, it was much, much more difficult. People had to get in their car. They had to go to the bank. Like Mike said, you might have 5 tellers there, so you only could move as fast as those tellers could move. So there was a lot of friction in removing that money, right? Which turns out to be a good thing. But if you look at today's world, you have your smartphones, everybody's banking online, they're banking on their phones, there's ATM machines everywhere. And now this lack of friction in the process actually was a bad thing. It wasn't a good thing. And so I'm not saying that's the cause of it,
right?
But that was the reaction to this, that now, before it might take days and days and days for the bank to get in jeopardy, but now in a matter of minutes, we can see what happens.
And when we say removing friction, we're talking about removing all of the hurdles to get one thing done.
Exactly.
So that's what we mean when we're saying, like, if you wanted to go make a deposit or go do something at the bank, you would have to actually go to the bank in person. And that's like what we talked about with Amazon's flywheel effect. They made it so easy for people to order online, purchase, get it shipped to their house. So it was like a seamless process.
That's right.
So we've experienced the upside and also what the downside can look like.
Yeah, because Silicon Valley Bank's like one of those forward-thinking type banks. Like they do almost everything digital. It's like it's very modernized and all that to reduce their friction. Yeah. And because of that, they actually had a lot of people coming in and making those deposits. And I think that's why it's in the news right now as being a problem, because it was so easy not just to deposit money, but actually to remove money. And people did it as soon as they got a hint of something that might be negative. So that's why it's in the news.
Yeah, and the $250,000 thing is maybe kind of an outdated rule based on the reality of today. Because that $250,000 kind of insured amount of money was that was all conceptualized years and years and years ago without any updates into the system. And now just understanding how fast money can move and how this can happen. There's been 3 other banks, I think, that they've made a run on today. And it's not going to stop until you get rid of the FUD. There's all this fear, uncertainty, and doubt. They call it FUD in the crypto world. Well, that's what's happening in this world too. And so the same thing that usually happens with a crypto token, as soon as the FUD gets going, everybody's trying to get their money out so they're not the goat sitting there at the end left with nothing. And that's what happened. That's exactly what happened. So maybe it's time to rethink the way that things work. And I would imagine that's probably some of the discussions that people are having right now.